Welcome to PrimeAlpha's interview series, insights from industry practitioners discussing their journey and their discoveries. Hello, my name is Amanda Jogia, the CEO of PrimeAlpha, an online ecosystem bringing together alternative opportunities and their investors. I would like to introduce Chris Chard, General Partner and Managing Director of Sower Farmland, a fiduciary farmland investment and management company executing acquisition and management strategies on behalf of its investor clients. He believes the foundation of the firm's success is built by putting the client's interests first. Chris has over 25 years of experience working with investors and consulting to help them with their challenges and identify solutions to achieve their goals. Welcome, Chris. Nice to have you here.
Thank you, Amanda. Thanks for having me.
I am so excited about speaking to you because you guys do farmland, and that is such a big part of my family. So actually, both of my grandparents were farmers.
Wow.
In Korea. Wow. And I told you my son tried to grow plants, actually pumpkins, in my apartment in New York. So I'm very excited to talk about farmland. So let's get started and tell us about your career journey and what led you here.
Sure, Amanda, but I'd start off by saying that it ends in the dirt. Little pun with the whole farmland stuff, but my whole career is being a sales guy. And when I got out of business school, right away, I started selling in the investment world. And, one of the things that led me to it, and one of the things I've always enjoyed the most about it, is helping someone with a new idea, something that perhaps they hadn't thought about or incorporated into their own portfolio or incorporated into clients' portfolios, giving them an extra idea of something that's accretive to what they're trying to accomplish for their clients. And so right out of business school, I started out wholesaling, and I did this for about a dozen years and over a couple of different firms. I ended up at one for over 20 years. But the onset of my career was taking a portfolio, an asset class to these advisors and sometimes directly to investors and just showing, the classic efficient frontier chart and say, gosh, add this asset, look what it does. Increases your return, it decreases your risk-adjusted return, that whole enhancement. So that's something that I always enjoyed carrying in my bag as I went out to make a sales call over the years. And it ranged from, this will tell you how old I am. People didn't own international stocks when I started doing that. So that was one of the first things that generally they didn't. And be able to show them that whole argument of why you need to have this asset and what it does, evolved over time to some fixed income products and also emerging market equities, international small cap. But that was always what I enjoyed, was helping someone learn something about the solution they're putting together, either for themselves, their family, or for a client base. While I was doing that, I would take the earnings that I made or the extra monies I generated, and I would invest that into something that's always been near and dear to my heart. Unfortunately, I don't have family members that are in farming other than my wife's family are farmers. But in my own immediate family, my dad was a doctor and didn't have a lot of exposure to that. But while I started having some success at selling, I would take that and I would literally plow that into fields of farmland and tractors and sheds and barns, and always enjoyed that. Just getting off, be peddling my wares in Manhattan on the sidewalk and up and down the street. And then on weekends, I'd always run off to this farmland as sort of a retreat. Always really liked this asset. And a couple of years ago, there was a very large investor, a tech billionaire, that bought in one transaction a large portfolio of farmland. He'd already owned a lot, but he bought a lot more. When he did that, he already had a team that was skilled at sourcing and vetting farmland and had built a sizable portfolio for him already. So he didn't need this new team that came with the new portfolio. So it was disbanded. Some of the people I know in the real estate business and the investment business, they got wind of this and offered me the opportunity to join up with the other partners I'm with here at Sower Farmland today, and to put the band back together and to go at this with a fresh start. Very difficult thing. 3 years ago, we were a first-time fund and unheard of name. A very difficult thing. I heard a private equity guy that was doing a first-time fund. He said, crush your soul. I feel very fortunate not to have my soul crushed, but gosh, it wasn't that far from that. I mean, very, very difficult thing to do, to go out and talk about. One, I'm talking about an asset class that it's the green leafy vegetable of the alternative investment world. It's a very plain, I mentioned earlier, we're in the dirt. We buy dirt and we don't lever it up. It's a pretty simple investment in our process. We spend a lot of time on figuring out how to buy it right. We think that's critical to the success of the outcome of being with this asset. But I look at this as a very simple asset. We've got a team that goes at it right. And today we offer a private equity fund, an evergreen fund. And we also do, for people that have very, very, very large means and portfolio sizes, we do separate accounts. But we love this asset. The guys on our team, you might see people that collect artwork or collect exotic automobiles or orchids or whatever. Our team is comprised of mostly people that have grew up on farms. A lot of their families in the farming business, and they're just really distinct. They can differentiate between a good farm and a bad farm, what's really productive, what's not, what you can buy and very easily fix up to be worth a lot more than what it was when you found it. So I'm just really, really fortunate to work with people that, not investment guys like me, but people that have a background of in the asset, living and breathing it. So that's part of my journey. Like I said, Amanda, it ends up in the dirt, and I've been a sales guy my whole life. So it's not particularly exotic or innovative, but I enjoyed selling those products over the years. And there's nothing I've enjoyed more than when you look at this portfolio today. One, hasn't spent the last decade in a bubble, somewhat reasonably priced in the world of all things investable. And it's very misunderstood, and it's hard for people to get at this asset. The wealthiest families in the history of this country, or many countries, they own farms. They always have, for a lot of different reasons. But for people today, for investors that might be really familiar with cryptocurrencies or some new technologies, this is something they typically don't have exposure to. We think they need it for a whole bunch of reasons. I could talk for an hour about.
It's so interesting because it's conventional, but it's not conventional, right? I think about land. If you own, home, you own land, but then you don't think about how can that play in your portfolio.
Yeah. And see, people might if you've got a lot to invest, you're going to want to have some ownership in commercial, not only residential real estate, but commercial real estate. And I think if you aggregate all the office buildings in the United States together, you're looking at a total number of about $3 trillion. If you aggregate all the apartment buildings, all the multifamily housing, it's about $3 trillion. If you aggregate all the farmland in the United States together, it's about $3 trillion. But the big difference is because of the number of REITs and different ways you can access those things I mentioned before, the institutional ownership or the democratization of those others is much higher. This has an institutional ownership, that $3 trillion aggregate number on farmland, of less than 2%. So it's staggeringly low. And I think because the certainty of the outcome, if you buy it right and you own it, we're only landlords, we don't operate farms. I think that's a big misperception that people might have about this asset. Gosh, well, we know, being a farmer is difficult, and we would agree with that. Yes, but we're not farmers, we're landlords, and once you get past some of those misperceptions, actually some of them are pretty real. Like if you were involved in commercial real estate, you might have a mantra like location, 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 right? Well, Dale Burbach, our director of acquisition, says, well, when you're looking at farmland, it's water, water, water. Okay, so if you look at where we'll potentially buy a farm, there's certain states we wouldn't touch. And not because they don't have viable farms today, but we feel like they're depleting the aquifers underneath these farms, and it's not sustainable. Whereas if you get into an iconic guy years ago, that one of the guys that got me interested in owning farmland, Barton Biggs, say the Corn Belt, the Midwestern Corn Belt, some of the most tillable, productive soil on planet Earth. Guess what? Most of the time, rain falls free from the sky. And a lot of, like the properties we have, Dale Burbach often says that we have to worry about how to get rid of the water. We don't worry about whether we're going to have water. We're worry about how we're going to get rid of it, because oftentimes we have too much. There's a ton of misperceptions about the government's role with subsidies, about pests and climate change and all sorts of things. And Amanda, I think that keeps a lot of people out of this asset. Those misperceptions that are pretty frequent and common.
Right. And so what is that attractor? So the investors are coming to you for what?
I had a number of presentations just this morning, and I tell you, today, one of the drivers is inflation. So when you own farmland, you're producing commodities, and ours are annual crops. So that's what the inputs into CPI are. So your income and the underlying appreciation of the farmland itself, it has a very mechanical relationship to inflation. We have some charts that show that in inflationary times, this actually outpaces the level of inflation pretty dramatically. And it's funny, I kind of laugh at who calculates these inflation numbers, because one of my biggest clients pulled a window sticker, and this also shows how old he is and I am. He pulled a window sticker off a Chevrolet Suburban that he bought in 1990. And generally speaking, people say, gosh, the 90s and 2000s, those weren't inflationary years, right? But when was inflation really, really big? I mean, the 80s, right? I mean, that's when it was double digits, or through these years that didn't seem very inflationary. A slap in the face to those people calculating those numbers are that 1990 Chevrolet Suburban loaded for about $20,000. And he showed it to me because he just bought one earlier this year, and it was $85,000. So you say, okay, this was not a time period of inflation, yet that asset, the price of a vehicle like that, it went up enormously. So getting back, I guess, Amanda, one of the biggest reasons today people come to look at this asset is as an inflationary hedge. It's bar none. Everything else seems to pale in comparison. But also, an advisor this morning say that his clients are asking for something a little different, and a market hedge as well. It's very difficult to predict the direction of the market, but his clients are generally the perception that stocks and bonds are going to be difficult over the next 5 or 10 years, what they've done in the last 5 to 10. So as a hedge to market risk, there's a number of places you can look at, Amanda, that track the value of this asset. And one is in the Aon building off of Randolph in Chicago with the NCREIF Group, the National Council of Real Estate Investment Fiduciaries. They actually have a benchmark for farmland. That benchmark has annualized over the last 30 plus years at about 11%. And the S&P 500 is thereabouts, probably about the same. So, and if you go back, the USDA has a larger data set of returns going back maybe a couple decades prior, and the Chicago Fed goes back about 100 years. And it's all about that type of return. So you're not really giving up a lot. I've often said this is like, buying an insurance policy against some really bad outcomes with, stocks or bonds or both. And yet you as a policyholder, you're paid the premium to hold it. And so it's just really, I think, as more people start talking about it, it's going to really take hold. But then again, like I said earlier, wealthy families have owned this asset for 10,000 years, right? So, and it did real well for them. I guess the back and forth, I think a lot of people that are in the ag farmland world, they've been saying, well, this is really going to take on, you really kick in, and they've been saying that for a long time. So who knows? It's not a crowded space. We believe that the best way to go at this is in the structure we created, because we were open-minded about it. We said, hey, if we're an investor in this, and at some point I hope to be a retired person looking for income and stability of my assets, and this is something we'd like to have in this structure of a private fund, relatively low expenses, and unfortunately, it's not going to be liquid, but that's the best structure we could possibly think of to do this in, and is what we chose.
Awesome. I've been talking about inflation way before it became a thing. I think I was talking about it 5 years ago. I remember exactly at a dinner, and the people I was with were saying, what inflation? Yeah. And I was like, well, obviously you've never bought butter or bread or milk.
Yeah, no kidding.
So I think this is fantastic. In terms of thinking back on the business, how has the business developed? Moments where you guys pivoted the thesis, or kind of thought about like, this is something that we need to modify on what we do, or wow, we really got it right?
Yeah, there's a couple of primary tools in our toolbox. And I guess one thing that kind of struck me is a little bit, so I wasn't with the team as they did this for over a decade prior. But what was sort of unexpected is we were like putting our pitch books together and originally forming the fund, knowing we've got a number of different tools in the toolbox. And I guess I didn't understand how big a deal buying off market is. I mean, I've been to a farm auction before where I didn't put my hand up. I didn't buy the farm that I was at an auction of, but that's not generally a good place to buy, and we never will. I mean, that's just our group is just they might sell at an auction, but not buying. And I guess it sort of struck me a little bit. I was surprised how relational it is, and how, these sale leasebacks, and, how big a deal that is in getting an off-market price. And in some situations where there's a generational transfer going on it's been quantified by the USDA saying that about 70% of all the farm ground in the United States, because the average farmer's age is in mid 60s or so, that it'll change hands in the next 20 years. So that's the USDA number, is 70% in the next 20 years. So sometimes a family will sell that land, that farm, at a discount in order to ensure that they have the right operator on it. I mentioned earlier, we're landlords, we're not farmers. So when a family is really, perhaps they're not going to be living too far from it in the local town, or for whatever reason, they want to see that land go on and be sustainably farmed, they'll sell it at a discount. That I didn't realize how big of a difference that made when we were first starting out. And now it's almost every single deal we do today. It has that relational aspect of someone wants to influence who's going to be on this farm and how they're going to farm it. And that's just, I wasn't expecting that to be the primary tool in the toolbox of buying it right.
I think that's so interesting if you think about people wanting to build and continue our legacy.
Yeah. I'd mentioned that to a private equity guy, a buyout guy, and he's like, well, that's not that uncommon, where you have a private business that's going to be taken out and the family saying, gosh, if you'll manage it this way, or you leave some people we really like at the helm, we'll give it to you at a discount. So it does exist. I was struck and taken aback by how important that is and how we're doing what we do at Sower Farmland.
So I'm going to ask you, Chris, my favorite question. So what is your superpower and why?
So, well, I don't have any superpowers, but I would say, with a team that is sourcing and vetting this land, doing the due diligence, but I think the superpower is uncovering it, finding someone, this network, creating this network that people bring the deal flow to us. And that's absolutely our strongest suit. And, like I said, I'm out investor relations, talking to existing clients and prospects. So I'm just going to say, Amanda, I don't have a superpower, but I tell you, I take my hat off to the folks on our team because they really, really have a network of people that bring deals to them that are just amazing. I mean, hardly a week goes by, I don't see something in front of them that, gosh, I just can't believe they uncovered it. And I can't believe the price we're able to buy it for our investors at.
Okay. So I'm going to beg to differ because you wrote down something where you talked about that you are amazing, right, at really helping people with their challenges and identifying solutions, and your ability to find Sower, which is an amazing product where you think you're helping people solve for a need in their portfolio.
Yeah.
And I could see kind of like the story that you're telling, like your journey and how it all kind of came together, and that helping people finding solutions.
Yeah, well, it's nice of you to say that, Amanda. You got to look at sales as helping people. I mean, you've got to be out evangelizing something that they need, that they're going to buy and be very satisfied with and continue with, and appreciate the fact that you showed it to them.
Amazing. Thank you, Chris, for your time. I love this conversation.
Oh, thank you so much for having me. I appreciate it very much.
Can't wait to have you back on.
Well, thank you. Thank you. Thanks, Amanda.
Thank you for listening to PrimeAlpha's Visionaries and Innovators podcasts. As always, you can head over to PrimeAlpha.com to sign up to our email list, as well as check out our other podcasts. See you next time.